past few months on our 8-month road trip, we've been under tornado warnings at least 5 separate times. We were in a hailstorm in San Antonio, Texas that dented our truck and our camper, and I am glad we have insurance in the case anything gets damaged.
Got no money on my mind, got no money on my mind, got no money on my mind.
Hi, I'm Prof. Stacy, the money teacher, and welcome to my classroom for the next installment in a series of videos where I'm discussing the different types of insurance policies available to help you protect your money. Today, let's talk about homeowners and renters insurance. It's one of those things that nobody really wants to talk about, but it's incredibly important to have. Remember, proper insurance is part of your risk management plan, and you want to share the risk with the insurance company when that loss would create a significant financial hardship for your family. So let's break down homeowners and renters insurance policies, and I'll explain everything you need to know. Let's start with homeowners insurance. If you own a home with a mortgage, your mortgage holder will require that you have homeowners insurance because it protects their investment in your house. But even if you don't have a mortgage, it's always a good idea to have a homeowners insurance policy because the premiums are relatively low cost and the amount of the money at risk, the entire value of your house, is high. There are several main types of homeowners insurance. The most common one is called an HO3, which covers your dwelling, personal belongings, and liability. This policy will financially help you repair or replace the building of your home and any other structures on your property in the event of a covered loss such as fire. It also provides financial assistance for your personal belongings in the case of a covered loss such as theft or fire. This policy also covers the costs resulting from injuries to residents or guests in your home or on your property, and provides some financial help if there's related legal actions against you. However, depending upon where you live, you may need to purchase more specific additional coverages for flood or earthquake, mudslides, or other specific events. Obviously, insurance companies don't want to cover hurricane damage in Florida, but you also don't want to bet against Mother Nature. So get the additional coverage if you live in a high-risk area. Within your homeowners or renters insurance policy, you can choose actual cash value, replacement cost, or extended replacement cost reimbursement. Under actual cash value coverage, the insurer will calculate its payout based on the depreciated value. Replacement cost coverage means the company will calculate its payout based on the original cost without any depreciation. Under the extended replacement cost coverage, the company will calculate its payout based on the full cost to repair or replace the building or the belongings at the current value. So this type of coverage offers protection against inflation. Now, let's talk about renters insurance. Everything discussed above for homeowners insurance policies is also true for renters insurance, except that the actual building is not covered. Many renters don't realize that according to law, any property can only be insured by its owner. So your landlord can insure her building, but not your stuff in her building. Renters insurance is very affordable, and many renting circumstances include having shared walls with other tenants. So having a proper amount of coverage is probably really good risk management. When it comes to choosing your renters insurance policy, you also need to select the deductible. The deductible is the amount that you will pay in the event of a covered loss before the insurance company pays the rest. The higher your deductible, the lower your premium. So it may make sense to have the highest deductible you're comfortable covering from your emergency fund in the case of loss. One thing to know about these policies is that for your personal items, they want proof of what you have and, in some cases, what it's worth. So you need to keep an inventory. Once a year, tour your house with your phone's video to visually and verbally record what's in your house. Make sure you keep a copy of the video outside of your house. You can also scan receipts for your big ticket items and store them in the cloud as extra proof. If you have any individual items or collections of high value that you want covered under your homeowner's policy or renter's insurance, you may need to have a rider on your policy for a specific item or collection. It's common to need to provide an appraisal as evidence of the value of the item that you want covered under the rider. You will pay an additional amount annually for the rider, but again, it'll be worth it if you ever do need to make a claim. Another thing to keep in mind is that these policies do not cover normal repairs and damage to your house, such as a leaky roof. However, it will normally cover if a tree crashes through your roof. Keep up with your regular home maintenance to avoid the first kind of problem. Get insurance to deal with the second. So, regardless of whether you own your home or rent, it's important to have insurance to protect your property and your finances. Homeowners insurance is typically required if you have a mortgage, but it's a good idea even if you own your own house outright. Renters insurance is also a smart investment to protect your personal property and liability. Be sure to shop around and compare policies from different insurance companies to find the right coverage at the best price for you. I hope that helps. Subscribe so that you don't miss any of my other videos in this series.